JPMorgan will now accept spot Bitcoin ETFs as collateral for loans, starting with BlackRock's iShares Bitcoin Trust. This move shows increasing confidence in Bitcoin among JPMorgan's wealthy clients and traders. BlackRock's iBit launched in January of 2024 and has grown into the largest U.S. spot Bitcoin ETF, managing over $70 billion. With JPMorgan now backing it for collateralized lending, Bitcoin takes another step towards being treated like traditional financial assets. What's different this time is that JPMorgan isn't limiting this to a few select clients. The bank plans to expand this policy across its trading and wealth management divisions globally. It will also factor crypto holdings into assessments of client net worth. This development follows similar crypto-friendly moves from Standard Chartered and Morgan Stanley. Even JPMorgan CEO Jamie Dimon, a known Bitcoin skeptic, recently acknowledged that clients want access to crypto. Political momentum around regulation might soon make it harder for banks to ignore digital assets without looking outdated. K-Wave Media, the first Korean media alliance listed on NASDAQ, has announced a securities purchase agreement with Bitcoin Strategic Reserve KWM LLC. Under this agreement, the company will sell up to $500 million in ordinary shares. The funds will support a Bitcoin-focused treasury strategy and deepen the company's engagement with the Bitcoin Lightning Network. The deal is inspired by Japan's Metaplanet, whose stock skyrocketed after a similar Bitcoin-centric pivot. K-Wave Media plans to build out infrastructure using the Bitcoin Lightning Network, allowing for fast, low-cost transactions. Imagine fans using Bitcoin to buy K-pop merch, tickets, or vote for idols. CEO Ted Kim says that this move reflects a future-facing strategy rooted in decentralization and innovation. While most of the funds will be used to stack Bitcoin, part of it will go into running Lightning nodes and improving blockchain-based fan experiences. Beyond music, K-Wave Media aims to blend digital finance with film and drama production. The firm wants to attract crypto investors to fund new projects. This is a significant step for Asia's entertainment industry, showing that crypto is expanding beyond just tech companies. The Ethereum Foundation has announced a new treasury policy that introduces strict financial discipline while sticking to its decentralized roots. The plan includes a spending cap and a savings buffer that ensures the foundation can keep running for 2.5 years, no matter how the market moves. They're capping annual expenses at 15% of total assets. This means the foundation won't overspend during bull markets or panic sell during crashes. The goal is to follow a long-term capital plan that's immune to market hype. ETH still makes up more than 80% of the foundation's holdings, but they're diversifying. Now they're using protocols like Aave, Compound, and Spark to earn yield on their ETH, and are also adding real-world assets like bonds and fixed deposits to the mix. A key piece of this update is DeFi Punk, a framework that prioritizes funding for privacy-focused open source and decentralized projects. Transparency will be a big focus going forward, with quarterly reports to show exactly how the funds are used. California lawmakers have passed a new bill that classifies inactive crypto as unclaimed property after 3 years of no activity. If a wallet on an exchange is untouched, no withdrawals, logins, or deposits, the state can claim the crypto, though it must hold it with a licensed custodian. The assets won't be sold off or converted. Instead, they'll be held safely until the rightful owner comes back to claim them. That's a key difference from the other unclaimed property laws and a nod to protecting investor rights. Critics argue that this law undermines Bitcoin's self-custody ethos and could push users to keep their assets off exchanges. Supporters say it brings crypto under the same legal umbrella as other financial assets like bank accounts or safety deposit boxes. The bill takes effect in July of 2026, giving crypto firms time to adjust. Hong Kong plans to legalize derivatives trading for digital assets. This step targets professional investors and supports Hong Kong's broader push to become a leading global center for crypto. The city's financial secretary confirmed the plan this week. The local regulator, the SFC, is putting a strong emphasis on risk management and transparent trading. Hong Kong already leads Asia with spot ETFs, staking services, and futures products approved earlier this year. Hong Kong's fintech ecosystem is booming, with over 1,100 companies and several regulated virtual asset platforms already operating. New tax perks for digital assets are also being rolled out to attract international funds and family offices. This policy shift reflects Hong Kong's broader goal of strengthening its position in the digital asset space. By developing a clear legal and financial framework for crypto derivatives, the region hopes to attract institutional investors and stay competitive with global financial hubs like Singapore. Chainlink Labs has joined the Global Synchronizer Foundation, a move that strengthens the Canton Network's interoperability efforts. The goal is to build blockchain infrastructure that's scalable, secure, and ready for institutional finance. According to the team, the Canton Network connects various blockchains, and Chainlink's Oracle tech is a perfect fit. With this partnership, financial institutions can now exchange data across chains without friction. This could be a game changer for sectors like finance and supply chain management. The partnership will help bring smart contracts into traditional finance. With Chainlink's real-time data feeds, transactions could now be more accurate and reliable, closing the gap between DeFi and mainstream financial systems.